Hi everybody, this is Jennifer Schaus and we're coming to you live today from Washington, DC. Thanks for joining us in our webinar series covering all parts of the FAR or the Federal Acquisition Regulations. As you know, all of our webinars are complimentary and recorded, and this year we are covering the FAR on Wednesdays and Fridays unless there's a holiday, and those will be at 12 o'clock Eastern. As you can tell by today's schedule. If you're looking for any of the recordings, you can find them on our YouTube channel where we've got now almost 700 government contracting videos. All are complimentary. If you're looking just for the PowerPoint, because I think there's a link or two in today's presentation, you can hop over to slideshare.net and you can log in there with your LinkedIn credentials. Again, that does not cost you anything either. If you're looking to sign up for any of the future parts of the FAR that we're covering over on our website, just click on the section called the FAR. You'll find the recordings and the future programming links there. You have to register individually for each of the parts, so just keep that in mind. We did actually cover the FAR back in 2020, so if you're anxious to get to a part that we have yet to cover, just keep in mind that some of the information from 2020 is going to be outdated as these regulations have changed over the years. And there is actually a new part that has been added that's open for comments through June 14th, I think, or it might be the 12th. This is going to be FAR Part 40, so that is on our schedule. You can find that on our website, again, under the section called the FAR. You won't find it in FAR 2020 because it did not exist then. Okay, a little bit about us, and then we're going to talk about our sponsors, and then we'll dig into the program. So we do provide consulting services for established government contractors, primarily helping them get onto GSA schedules, and then all parts of post-award, whether it be compliance, reporting, modifications, audits, renewals, and everything else that goes with GSA schedules. We also have proposal writers on staff, as well as folks that help with pricing and pricing strategy and kind of that back office contract administration. The email to reach us is at the bottom right hand corner of your screen, hello@jenniferschaus.com. We also have another part of the business that is geared towards companies that sell to federal contractors. So our newsletter now reaches over 30,000 subscribers, most of which are government contractors. You can advertise there. You can advertise in our webinars. You can put on your own webinar with us. We have an event coming up at the Kennedy Center on June 24th where sponsorship opportunities are available. That event will bring in at a minimum 300 federal government contractors, at a maximum 400. So keep an eye out for details on that. As I mentioned, here's some stats on our newsletter and who we reach. And if anyone's interested in any of these contract vehicles, shoot us an email to the hello@jenniferschaus.com. And we thought this would be helpful, attending any of the scheduled hearings over on the Hill. This is what's happening later today through to Wednesday, May 22nd. So if you're selling to any of these departments or agencies, it might not be a bad idea to go and sit in on the hearings to understand what the budget entails, where the money is going to flow, and how you might be able to get a piece of that. Okay, these are also some complimentary webinars that are coming up. We are working with the Eastern Michigan Apex Accelerator, formerly known as the PTAC, covering GSA schedules. It's later this month, early next month. We're talking about basics of marketing. Again, complimentary webinars, more locally, happening in June, August, and November with the Virginia Apex Accelerator. I'm teaching another class, 2 classes on GSA schedules, and then 1 on marketing that's sandwiched in between there in August. One of our sponsored content clients, Carrie Palmatier from Palmatier Law, is covering a 2-part series on SBIRs. It's going to be back-to-back Thursdays in June. Those are listed on our website under events, even though they're actually webinars. You can sign up there. Again, those are complimentary. Okay, now we want to thank our webinar sponsors, which actually make our webinars complimentary. So without them, we would have to charge you all. So please take a moment here to let me describe who they are. So GovEvents is the premier platform for posting events related to government and government contracting. You can find all of our webinars and our events on govevents.com, as well as recordings from our past almost 700 webinars. We also want to thank Tom Johnson and his team at Set Aside Alert. That's the go-to publication for contracting opportunities for small, women-owned, veteran-owned, hub zone, and 8A firms. Visit setasidealert.com for more information. The Fairfax Economic Development Authority has an online calendar of events and webinars, and we want to thank them for posting our events and webinars on their calendar. The Virginia PTAC, formerly PTAC, now Apex Accelerator at George Mason University in Fairfax, Virginia, offers free one-on-one counseling to established government contracting firms in Virginia on federal, state, and local procurement topics. If you're interested in learning more, please use the links provided to explore services, review homework recommendations, register for live training, and find useful links to agencies and other self-directed learning. One-on-one counseling is limited to eligible client companies. Appointment requests are handled in the order they were received and based on counselor availability due to high demand. Online resources and group trainings are free with no restriction on your business location. The Greater Reston Chamber of Commerce has a government contracting council meeting. It's always the last Tuesday of the month. So they will be meeting on Tuesday, May 28th. If you've got questions, you can contact Alicia Field. Her contact information is there at the bottom of the screen. BidSpeed, do you want help winning government contracts? BidSpeed can help. Users can find bidding opportunities from federal, state, and local government. Additionally, you can search for teaming partners, incumbent point of contact, expiring contracts, compliance matrix, and other proposal templates. Create your login today at bidspeed.com. BidSpeed is an official partner of the US SBA's 7J Management and Technical Assistance Program. The FBC events are the ultimate engagement channel to bring government and industry together. 68% of government personnel report that they attend more than one event each year. FBC has worked with government and industry for 45 plus years to create gatherings where ideas are shared and to help government achieve its goals. This includes agency industry days, cybersecurity symposiums, tech expos, and offsite meetings. FBC provides full life cycle meeting planning and event management. With over 5,000 meetings under their belt, that's a lot. FBC has the experience, systems, and personnel to make your next event exceptional. Learn more at fbcinc.com. Okay, last but not least, GovBrew. Please check out our friends over at GovBrew. GovBrew is the most read government contracting newsletter, keeping thousands of government contracting professionals in the loop with news, updates, and opportunities in the federal contracting market, all in a fun and accessible email that only takes 5 minutes to read. It's 100% free to join. It goes out every Monday, Wednesday, and Friday at 7 a.m. It's filled with great content, event postings, webinars, and more. We encourage you to sign up at govbrew.co, or you can use the QR code you see on the screen. Okay. Oops. Yikes. Hope you guys are still with me here, but sorry, I think I moved to a slide that I shouldn't have. And okay, sorry. We are covering FAR Part 31 today. We are lucky to be blessed with 2 speakers today, so you'll get double the value. From Cohen Resnick here. Again, FAR Part 31 is Contract Cost Principles and Procedures. Lori Allen and Caitlin Lewis. Lori, I'm going to put myself on mute and turn the floor over to you and Caitlin. Thanks for joining us today.
Thank you so much for that wonderful introduction, Jennifer, and thank you so much for having us today. We are honored to be speakers on this topic today. My name is Lori Allen, and I'm a director in Cohen Resnick's government contracting practice. I've been with Cohen Resnick just shy of about 5 years now, and I was with DCAA for about 9 years prior to that. Prior to that, I was actually in corporate accounting for about 10 years. So all of that gray hair that you see in that picture was earned every one of them in this lovely accounting career. Now in this career, I have worked with Department of Defense, Department of Energy, NASA, FEMA, NOAA, CMS, the UK Ministry of Defense. I've performed audits for a variety of government agencies and entities, and have had a great career in audits and advisability on cost allowability, allocability, reasonableness, realism, and compliance. So covering all of those areas. For our advisory and commercial clients, I specialize in incurred cost submissions, CAS disclosure statements, rate re-engineering, and due to that highly technical audit background, I'm often brought in or tagged into business system audit readiness engagements. So really a wide variety background, a lot of FAR knowledge that I'm going to share with you today. And I am going to turn it over to Caitlin to also introduce herself, and she also has a great background to provide you today.
Thanks, Lori. So my name is Caitlin Lewis, and I am a manager. I am part of the GovCon group, and I am located here in San Diego, California, so representing the West Coast. I have been with CohnReznick for a little over 5 years now. Prior to that, I did work with DCAA for about 13 years, so I do have a good bit of experience in the government contracting arena. I do work on both the audit side and the advisory side with CohnReznick, so I can do an excellent job of telling you what you're doing wrong or exactly what you should be doing, depending on which hat I'm wearing that day. I really do enjoy following rules, and so something like FAR Part 31 with all of its allowability restrictions is right up my alley. My true passion, though, when it comes to government contracting are cost accounting standards. So I do love working with clients to help figure out how to comply with the various standards and how to maintain their disclosure statements. All right, so I think we can move to the next slide.
All right, so this is a little bit of information about CohnReznick. I'm not going to read the slide to you, but just know that that first sentence of that last paragraph there, we provide full life cycle support for your contract as you seek to grow. I think that's a great tagline there. Really, from start to finish, we have a team of specialists that can come in and help you, whether it's from an audit perspective or an advisory perspective, or you're being audited and you need audit representation. We have someone who wears that. I'm going to borrow Caitlin's language. I love wearing the multiple hats. We've got someone who wears that hat. So that's a little bit about us, and we want to focus in on why you're here today and the FAR. So if you'll take us to the next slide, we'll introduce the topic here. We're going to talk to you today about FAR Part 31, and those are the contract cost principles and procedures. A lot of agencies have other supplements other than FAR Part 31, but FAR Part 31 is kind of the gold star standard. If you're following that, you're probably okay in all of your other agency supplements as well. But you should definitely be referencing them, and we'll give you some reminders of those in a little bit. So when we talk about FAR 31, we weren't sure exactly what our audience was going to be. So we have a little bit of beginner content and a little bit of more advanced content, hopefully getting everyone to the same playing field. But we really want you to understand the terms allowable, allocable, and reasonable. And we want you to understand expressly unallowable costs and the consequences of claiming them. And then my favorite part of this presentation is reviewing risky selected areas of cost. And the reason we do that is because, like Caitlin and I both said in our backgrounds, we're both previous DCAA auditors, and we are current auditors here at CohnReznick performing audits for Department of Energy, CMS, and some others. So we're still wearing that audit hat, and we see a lot of what happens in the real world, in real life. What are people claiming that in their government incurred cost submissions that they should not be? So we're going to talk to you about some of the places where people get tripped up very often in misinterpreting what the allowability clauses are, and then understanding best practices related to identifying those unallowable costs. Next slide. All right, I'm going to turn it back over to Caitlin.
Thank you, Lori. So we all hear the terms allowable, allocable, and reasonable pretty frequently in the GovCon arena. These cost principles in FAR 31.2, and they should be used when pricing flexibly priced contracts, which does include the materials portion of a T&M contract, and they should be used when negotiating indirect rates. What's also worth noting about these cost principles is that they can be used in pricing fixed price contracts whenever cost analysis is performed or there's a clause that requires negotiations of the cost. So just because the words fixed price show up doesn't mean that you get to ignore 31.2. Next slide, please. So we'll go ahead and we'll start off by discussing allowability. So if you look here, you have to appreciate that FAR then goes ahead and references other parts of FAR in order to determine allowability. You see they've thrown in reasonableness and allocability there. That, of course, means that a cost must be reasonable and allocable in order to be allowable, and we'll go into those two elements in just a moment. The costs to be allowable also must be compliant with pertinent regulations. What gets contractors all the time on allowability is that the costs should be consistent with your practices and must have adequate supporting documentation. If you're claiming $1 million in legal fees, the auditors are going to want to see the contract, invoice, and potentially work product. Let's go ahead and move into reasonableness now. Reasonable costs are ordinary and necessary and should not exceed the amount incurred by a prudent business person. Additionally, the costs need to adhere to laws and regulations and follow company practices. As we discussed on the prior slide, if a cost isn't reasonable, it's also not allowable. Let's take a look at allocability. So allocable costs must be incurred, may be incurred for a specific contract or can benefit multiple contracts and be necessary for business operations. Of course, if it benefits multiple contracts, then the costs should be equitably allocated to the benefiting contracts. If a contract does not receive the benefit, it should not receive the cost. And I'll turn it back over to Lori now.
All right, thanks, Caitlin. So our next topic that we're going to dive into, I see we got a slide, there we go. The next topic we want to cover, now that we understand what allowable, allocable, and reasonable means, is unallowable costs, because that's what a lot of FAR 31 detail gives us, is expressly unallowable costs. So when we talk about the definition of expressly unallowable costs, it really gives it to it in the statement. It's expressly stated somewhere in some shape or form. It might be directly written into your contract terms and conditions. It might tell you that you cannot claim overtime on training. I know that's a FAR, but sometimes it's actually written into the cost, contract costs as well. But you need to read your contract, you need to brief your contract and understand what is expressly written into that contract as unallowable, and also understand the FAR 31.2 clauses that detail what is expressly unallowable. Some of you may need to follow 2 CFR Part 200 if you're a not-for-profit or some other regulations. They will also have some sections about what is expressly unallowable. So make sure that you're reading whatever supplement is applicable to you and understand what is unallowable and what the potential consequences might be. Next slide. So when we're thinking of expressly unallowable costs, it should be directly stated in some way, shape, or form. There should be no doubt in your mind that the costs are allowable or unallowable. And so I wanted to give out or call out a couple of examples where the FAR is very clear. Not all of them are super clear, but these in particular are. FAR 31205-8 tells us that contributions or donations, including cash, property, and services, regardless of the recipient, doesn't matter how good the recipient is, they're still unallowable. They're all unallowable. Costs of alcoholic beverages are unallowable. The FAR is very explicit. It's very clear. There's no gray area here. Unallowable. So when we talk about expressly unallowable, when we talk about direct terms, That's what we're meaning here. There's no room for interpretation here. They are unallowable. Next slide. So here what I wanted to point out is sometimes it's not expressly stated. So just because it's not expressly stated, like alcohol said, cost of alcoholic beverages are unallowable, doesn't mean that you don't infer that they are directly unallowable. And what I mean by that is to say, in FAR 31205-19 is a good example. It says costs of insurance on the lives of officers, partners, proprietors, or employees are allowable only to the extent that the insurance represents additional compensation. So you can infer then, if it does not represent additional compensation, it is unallowable. So the government still considers that to be expressly unallowable. Even though the clause itself doesn't say it's expressly unallowable, it tells you what's expressly allowable. Therefore, the inverse of that or the opposite of that would be unallowable. So I just kind of wanted to show you the nuance there. And then for some additional guidance, DCAA has a great MRD released in May of 2019. It's called an audit alert on identifying expressly unallowable costs. If you can't get to the link here, you can Google that. It's a great document to review and has some really good additional information in there. Next slide. So here we want to talk to you about directly associated costs. And this is something that gets people a lot. If we find that you have claimed an unallowable cost, chances are there's going to be some directly associated costs that go with that. And what that means, I want you to think of the but for or the because of circumstance. And what that means is if you had not had that unallowable cost, you wouldn't have had all of these other costs. And I want to give you an example here of thinking about a business combination or an M&A activity. Those are unallowable per FAR 31205-27. So when you're thinking about what's unallowable, it's not just the legal costs that you're going through for that business combination. It's the printing or production of any materials that you need. It is the time that you spent working on the unallowable activity. So any time that you or your staff have contributed to this M&A, all of that time is unallowable, and all of the indirect costs allocable to that time are unallowable. Any consultants that you brought in to work on this are unallowable. Any travel that you had to do is unallowable. Any meals or entertainment or client meetings or things that you've had to do. I think I'm getting my point across. If it wasn't for this merger and acquisition, all of these other things wouldn't have happened. All of those other things are also now unallowable. So you really need to be thinking about that when you're identifying an unallowable cost. It is that cost and everything else that happened as a result of that cost. Next slide. Assessing penalties.
Oh, and I think this is me, Lori, right?
Yep, sure is.
Okay. So thank you for that great explanation of expressly unallowable costs, because we need to know that, since if we don't follow the rules and you do claim expressly unallowable costs, you will be penalized. And there are two types of penalties. There is the amount of the disallowed costs allocated to contracts for which an incurred cost proposal has been submitted, plus interest on the paid portion, if any, of the disallowance. The second is if the indirect cost was determined to be unallowable for the proposal submission previously, then the penalty is 2 times the amount of the penalty we just discussed. So they really can hit you with those penalties, and it can add up quickly. As I mentioned, interest is included on the paid portion. So the interest is computed from the midpoint of the contractor's fiscal year in which the overpayment occurred to the date of the demand letter for payment using the published treasury rate. So potentially, if you've been paid for the cost, but now your incurred cost proposal sits for a few years before audit, that interest cost can really add up. The contracting officer is required to assess the penalty unless a waiver is granted. The conditions in which a waiver is granted would be if the contractor withdraws the proposal before the government initiates an audit. So let's say you find out in 1 year, hey, this is an unallowable cost. You definitely want to make sure that it's not getting claimed in your next proposal and getting hit with level 2 penalties. So you could withdraw your proposal before the audit starts to clean that up. The other way a waiver is granted is if the expressly unallowable costs are immaterial, or if the costs were included in error. And next slide, please.
All right, I believe it is back to me, and I just want to highlight that again because I don't think the contracting officer or the auditors really share that with contractors as well as they should. If you have 2 or 3 incurred cost submissions sitting out there and you get that first year audited and you have unallowable costs, you can resubmit those later years and clean those up before they get audited. And like Caitlin said, we would highly encourage you to, because you can get penalties up to 200%. So you have to pay back the cost, the interest, plus 200%. So those can really add up, and it is definitely worth a relook to make sure that you have clean submissions. All right, so now this is my favorite part of this webinar. We want to talk to you about some selected area of cost that we see cause people problems all the time. When we talk about performing audits for the government, these are the areas that we typically find unallowables, expressly unallowables, and we're reporting them in our audit reports. So we wanted to kind of give you some highlights of these areas and where people may go wrong, and which ones probably need a little bit more perusal before you claim them. That first one here is FAR 31-205-13, which is employee morale, health, welfare, food service, and dormitory costs and credits. We've just got the highlights here. This is a very big clause. It has a lot of information in it. So we're just hitting some of the highlights here. House publications, okay. Health clinics, perfectly fine. Wellness and fitness centers, yes. Employee counseling services, absolutely. Food and dormitory services, yes. There's a lot of rules and regulations that go along with the food and dormitory services, so I would encourage you to really read that whole FAR. But if you have that, it is okay. Here's the unallowable. Here's where people get tripped up a lot. Gifts, unallowable. Any kind of gifts, they're unallowable. I'm going to say it again. Gifts are unallowable. If it's not a bonus or part of your routine compensation or performance plan, it's probably unallowable. Recreation, unallowable. You can't buy out, half a section of the ball game and take your whole company out to the ball game as a celebration. It's unallowable. Contributions to employee organizations, they're unallowable. One of the things I think of here, we see this a lot. You've made let's say one of your employees has a Girl Scout troop and they need a sponsor for a trip, or they need a donation for something, and you write them a check for $100 or $500. You can absolutely write them the check, and you can absolutely probably take that as a tax deduction of some sort, but you cannot claim it to the government. That is an expressly unallowable cost. So read through this section very carefully before you start thinking these things. You're like, oh, I'm doing it for my employees, it's okay. And it might not be okay. You really want to take a closer look at this FAR. And auditors are always conservative. So if there is a gray area, an auditor is probably going to side on the more conservative side than on the gray area, looser side. So keep that in mind if you're someone who gets audited every year and your auditor gets a hold of these maybe gray area costs, they're probably going to question them. And that then they could potentially be assessed for penalty. Next slide. Here's an example, and this is a real world example. I kid you not. I changed the name of the location, but all of the facts and circumstances that I'm going to read to you here actually happened in an audit. You are a small business that just had a stellar year. In appreciation, you take your team on a year-end trip to Bahamas, and not just your team, but their families too. And you put all of that in your G&A pool. Well, guess what? 100% of that is unallowable. This is an unallowable gift. It is not a performance award. This is not a customary practice that you have. You did not include the cost of the trip in anybody's compensation, so you can't say it was part of their comp. This is unallowable. Again, these costs can be incurred. You can absolutely do this for your employees. Heck, I encourage you to. I want to come work for you if you're going to take me on a year-end Bahamas trip. But you can't claim them to the government. The government's not going to reimburse you for these costs. Now, what I want to also point out here, we talked about those directly associated costs. So the cost of coordinating the trip, whatever time you spent on it. So it's not just the cost of the travel and the rooms and the meals, it's the cost of prepping for the trip, the travel agent's fees, all of that is unallowable. Maybe you got everybody matching t-shirts and you bought everyone backpacks so you can all travel in style together. All of that is unallowable. Think of the but for you doing this trip, all of those other costs would not have been incurred. They were only incurred because you did this year-end trip. Therefore, 100% of all of them are unallowable and penalties may be assessed. Next slide. Another one we see a lot of findings in is public relations and advertising costs. Now you can see in the allowable column, again, I just pulled out the highlights here. In the allowable column, you can see there's not a lot that's allowable. But in the unallowable columns, you can see there's a lot of unallowable things that it calls out specifically because it leaves less room for gray area here. So allowable is specifically required by the contractor, requires from government requirements. Participation in community service is okay. Plant tours and open houses are perfectly fine. When we get into the unallowable, cost of memorabilia, alcoholic beverages, entertainment, facilities that you're housing the public relation or advertising function in. If the primary purpose is to promote the sale of products or services, it's unallowable. Trade shows and special events, unallowable. Non-technical sponsoring meetings, unallowable. Ceremonies, unallowable. Promotional material, motion pictures, magazines, videotapes, unallowable, unallowable, unallowable. Souvenirs, models, imprinted clothing, all that swag we talked about, unallowable. And then memberships in civic and community organizations. If it's not a technical organization, it's unallowable. So this is an area you really, really need to look into deeply. We have a lot of findings in this area. And it's not that people are even trying to push the envelope. They just didn't understand that those types of costs were unallowable. And not only unallowable, but expressly unallowable. So I highly encourage you, if you have any of these types of costs, dig into the FAR, this 205.1, and really understand the allowability. Next slide. Another great one, professional and consultant service costs. In order for them to be allowable, they have to be reasonable. You can't hire a consultant and pay them $1,000 an hour to mow your front yard. You know, I'm being really ridiculous there. But it has to be reasonable, and you have to, prove or show how you determined it was reasonable. So that goes back to good record keeping good records of how you're making your selections and determining reasonableness. The necessity of the service versus being able to perform the service yourself. If you can hire someone to perform the service for $100,000 a year, but you're paying a consultant $300,000 a year to do it, the government might take exception to that. They might say, hey, you need to hire somebody. We're paying an extra $200,000 a year for something that you could just hire someone to do. And then adequacy of the contractual agreement for the service, that's very important. You have to have a good agreement in place, and the FAR is going to give you some things that you need to make sure that your agreement holds. But you want to have a good scope of work and a good time frame or period of performance in that subcontracting or that contracting agreement, because if you don't, the auditor could come in and say, this doesn't match, this isn't what you agreed to, this is not allowable. And it has to be supported by evidence of the nature and scope of the service furnished. And what that means is they can't just say, hey, I did $500 worth of work this month, here's the invoice. Well, what did you do? What did you accomplish? What was the deliverable? What was the work product? There has to be some way to show what that person is doing for you and that it brought value for the dollars that you're spending. Here, the government really just wants you to take ownership of what you're paying people to do and making sure that you have good project management over those functions. So when we talk about that from an unallowable perspective, we have to think about what you can't hire somebody to do. And you can't hire someone and say, I will pay you if the government pays me. That's not okay. That's an illegal, or not illegal, an unallowable type of agreement. Anything that is illegal or unlawful or gives improper influence in any way, shape, or form, or even touches on it in any way, shape, or form, the government wants nothing to do with it. So if you're pushing the envelope in any of those types of areas, it is unallowable. And then services, this is the important piece of this. Services not consistent with the purpose and scope of the services contracted or agreed to. Going back to the lawn example, if you hired someone to mow your front lawn, and they're going to do it for $25 per service, and you tell them, you know, the third time they come out, you tell them, hey, can you do the backyard and the neighbor's yard too? I'll give you $100. And they say, sure, I'll do that. Well, guess what? That's not what you contracted them to do. That is not part of their contract agreement and could be looked at by an auditor and called unallowable. The only allowable costs are what you reviewed to be reasonable and entered into an agreement to do for that specific period of time. So if it's outside of the period of performance, that can also be questioned and called unallowable. So it's very, very important that you're managing, doing proper program management of your professional and consultant service costs so that you don't end up claiming costs that are technically unallowable because they're outside of the scope of what you agreed to in that agreement. Next slide. All right, I'm going to turn it over to Caitlin for compensation.
All right, thanks, Lori. So what we're looking at here, these are all of the topics covered by FAR 31205-6, compensation for personal services. This one FAR covers things from bonuses to severance pay, fringe benefits, pensions, ESOPs, and on and on. Today, we're just going to touch on the general rules, bonuses, and limitations on allowability. But it's always good when you're dealing with compensation costs to go to the FAR reference and take a look at this to see what applies. Please go ahead and go to the next slide. So in general, work performed by the employee must be done in the current year and not represent a retroactive adjustment of prior year's wages. The cost should be reasonable for the work performed, and the compensation must be based upon and follow the terms and conditions of the contractor's established compensation plan or practice. Some contractors maintain a compensation plan that they submit to the contracting officer on an annual basis. This plan may cover all types of increases, such as performance increases, market increases, as well as bonuses and the benchmarking process. Worth noting is unless the contracting officer has had the opportunity to review your plan or changes to your plan, you cannot assume that the changes result in allowable compensation costs. So it's really important to make sure that you're getting that ACO buy-off before you're making those changes or implementing those changes. Next slide, please. Again, we see reasonableness is included in determining the allowability of compensation costs. In addition, the aggregate of each measurable and allowable element should sum to a reasonable total and should consider only the allowable individual elements. Keep in mind, compensation isn't just salary. It includes bonuses and other incentives, so you do need to make sure that you're hitting everything that adds up to that person's compensation. To help determine if compensation costs are reasonable, some contractors choose to use benchmarking or salary surveys. Factors considered in benchmarking process are firm in the benchmarking process are firms of the same size, in the same industry, in the same geographic area, and engaged in similar non-government work. An area where we're kind of seeing things change a bit is with the option of remote work. Geographic area is becoming more challenging. In order to attract the best talent, you may have remote employees from all over the United States and find that where your headquarters is located is not most representative of your geographic area. In that case, it could be best to use the entire United States for your benchmarking process. What you want to make sure to do, though, is to document in your compensation plan that decision and the rationale for that decision. Next slide, please. All right, now we're on to bonuses and incentive, which we all love. When it comes to bonuses and incentive documentation, I say, and really when it comes to compensation in general, I say document, document, document. I do have a few articles out there about pre-award and post-award compensation, and that is the theme of those as well. Document what you're doing. Bonuses and incentive compensation are allowable if they follow an established plan or policy and the basis of the award is supported, which in short is document what you're doing and document what you did. For example, if you're awarding a key employee bonus, the compensation plan should explain how an employee can earn that bonus and the range for the bonus. The HR records should support the effort the employee performed to be awarded the bonus. You can't simply say, Bob does a good job, so we're giving him $1,000. It would need to show Bob did projects A, B, and C. He exceeded expectations, and so he earned the higher range of the bonus and is getting $1,000. Just more detail tends to help. On this next slide, we will see some other best practices for bonus and incentive pay. You can come back to this one later if you are looking for some tips and tricks. We'll go to the next slide, please. Now, while you can pay employees as much as you deem appropriate, that doesn't mean that the full amount is allowable. FAR sets limits on allowability of compensation. Depending on when your contract was awarded, different parts of FAR 31205-6P are applicable. So if we go to the next slide, we will focus on contracts awarded after June 24th, 2014. You can see that for those contracts, there is a compensation cap set for each year. Just because your cost is under the cap doesn't mean that you can claim that it's automatically allowable. But anything claimed over the cap may be considered unallowable. When you're claiming compensation costs, you still need to apply the general compensation rules, even if your cost is under the cap. Next slide, please. So another area where we see a lot of questioned costs is travel. Travel costs include costs for transportation, lodging, meals, and incidentals. Here I've noted the regulations related to different areas. So whether you're traveling within the US, outlying areas of the US, or overseas. It's also a good idea, and I've included the link here at the bottom of the slide, to check the GSA city pair link. This link will show you the lowest available cost between city pairs on a given date. So if you're charging well above that, just know the auditors are going to use this and could potentially question costs. Let's go ahead and move to the next slide, please. So we have some examples of allowable and unallowable travel costs. So allowable is the lowest price airfare available during normal business hours, and that's where that GSA city pair website comes in handy. Allowable, properly documented travel costs. You've got the support for it, you have your ticket, you write down why the person had to do the trip, you have the dates of the trip, that's perfect. Also allowable, costs of travel by contractor-owned, leased, or chartered aircraft if specifically required by contract. So yes, that means potentially if your contract calls for it, you could get to fly private if it's required by the contract and get to claim that cost. Also allowable, lodging, meals, and incidental expenses based on per diem, actual expenses, or a combination thereof. And that would depend on what you have in your accounting policies and procedures for reimbursing travel expenses. If we look at the unallowable side, basically it's just the opposite of those. So unallowable, any cost in excess of the lowest price airfare. Now, it doesn't mean that the full cost will get questioned. It just means the cost over the lowest price could potentially be questioned. I actually had one client or contractor I was auditing, and they wanted to claim first class airfare because the gentleman flying was very tall and did not like sitting in economy. That's not really a specific exception. He didn't have a doctor's note, and so we went ahead and questioned the difference between the lowest cost airfare and the first class ticket. Also unallowable, travel costs that are not adequately supported, but you all saw that coming. Additionally, the maximum per diem when no lodging costs are incurred. If you don't need to stay the night, but you claim lodging costs, those would be unallowable. Also unallowable is the maximum per diem on a partial travel day. On the day of departure or return, you do not get full per diem for the day. It's only a percentage of that. So if you claim the full per diem, that portion would be unallowable. Next slide, please. So we have covered a lot of material today, and we've only touched a little bit on the multitude of costs covered by FAR Part 31. You see here we posted a little handy quick reference guide that helps to determine whether a selected cost is allowable or unallowable, and it covers everything that's included in FAR 31.205, and then it tells you if it's allowable, unallowable, or allowable with restrictions. I think this is always a helpful starting point when I'm trying to determine allowability of a specific cost. Next slide, please. If you would like to get a copy of the quick reference, access any of the compensation articles we referenced earlier, or see any of the other tools that CONResnick has available, you can get this information at our conresnick.com/govcon360 website. And that's all that I have today. Lori, was there anything else that you were interested in covering?
I actually wanted to tag on a little bit to your travel and say that as an auditor, whenever we select travel for testing, there's always a finding. And it's always something like eye rolling. It's $10 over, the hotel is $10 over per diem. There's not receipts on supporting this expense report. There's no trip purpose, and nobody remembers or has any emails supporting why this person took this trip. And it's always small dollars. We're talking about $10 here, $5 there. Again, the difference in the lowest airfare versus the airfare that was taken, the difference between that first class air ticket versus the regular air ticket. You know, you can have a $45 million contract, and here we are questioning $100 here, $5 there, $10 there. But because it's expressly unallowable and we found it, we have to question it. We have to project it on the universe. We have to, report on it typically. So travel is just one area that I would highly encourage you to scrub it on the front end, scrub it on the back end, have an extra set of eyes look at it. Nobody likes auditing travel because, like I said, I don't think I've ever audited travel and have it be clean. There's always $5 here. There's always $20 there. There's always something there because there's so many different moving pieces and parts on those expense reports. So I just highly encourage you to take extra care when reporting your travel as allowable. And with that, we have our contact information here. I will probably reach out to you on LinkedIn if you don't reach out to me first, and try and get you in my network. I do often post tips and tricks, a midweek mastery series. I post FAR Fridays for all the latest and greatest that's coming out of the FAR. So I love to connect with you on LinkedIn. And thank you all for your time today. We greatly appreciate it and had a great time pulling this presentation together. And Caitlin, you did a great job. Thank you so much for all of your work and effort on this as well. And thank you, Jennifer, for having us today.
You're welcome, Lori and Caitlin. It was great to have you guys with us. There was excellent content, and everybody who joined us live, you've got Lori and Caitlin's contact information. In the event that anybody's watching this on YouTube, you're watching the recording, leave us a comment, like the video. If you subscribe to our channel, it does not cost you anything, and you'll be alerted of any of the new updates or any new webinars that we upload to the channel. There's almost 700 complimentary webinars that we have on government contracting here on YouTube. So please subscribe to the channel, and we hope to see you on Friday for the next FAR part. Again, thanks to everybody who joined us, and we'll see you in 2 days. Thank you.
Thank you.